Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Morning, everybody. You guys are all having a great week so far. We'll cover some markets in here. So I thought, or at least I wanted to see dollar go higher. Right now, I'm trying to target this gap in here. Obviously, yesterday we just had an inside day. So if we lose the low of yesterday, then obviously this is not going to work out. But I was anticipating to see a higher low in here. All right, we're trading down into this previous high back here. We have this old high here. But this market does need to turn around. Now, today is a US holiday, so just keep that in mind. We might not get any follow through. So right now, I've been short overnight. It's obviously having a hard time. I might get stopped out. But the reason why I went short was we had this bullish fair value gap. After we got the close, I went short. But overnight, I was not expecting this large rally here. So, you know, this was really taken on a daily time frame. Now, my stop is above yesterday's high. If this thing turns around, and just because today's a US holiday, we might get another inside day, which would, you know, be ideal for me, just because I kind of want to see it roll over and target these equal lows in here. Now, I believe on the euro, right, just the CFD chart, that we don't have equal lows down there, right? We're trading down into this bullish fair value gap. So that could possibly pose an issue for us. The futures chart is a little bit different than that. So we'll see if this market wants to roll over. Obviously, I've got a little bit of risk on this trade, right? It's down a little bit over half an hour right now. But I'm willing to hold through today and overnight if I need to. You know, obviously, as long as I don't get stopped out. So again, my target is this gap up here, but needs to turn around and start trading towards that level. Pound obviously would have been the better trade. If we just take a look at euro pound looks a lot stronger. So obviously shorting the pound instead of the euro would have been a wiser choice. But yesterday, when I took the trade, pound actually looked stronger. I'm not going to cover gold today, guys. And I might not ever cover gold because I'm not a gold trader. Overall, Aussie probably looks like one of the weakest. And yesterday, so NQ also, we've got some strength popping back in. I'm interested to see if we trade to 25,900 on NASDAQ. But I really don't want to see us lose 50% of this wick down here. So we have this 4-hour wick from yesterday. Ideally, we don't lose that level. And we maybe turn around and pump higher at the open. But yeah, if I get this one wrong, then just call it a day, just because of the holiday. Right now, it's not looking great, to be honest. But again, my stop is kind of above this 4-hour high. And just so you guys are kind of aware of my situation, I usually slow down going into like Thanksgiving and the end of the year. I tend to like wrap up a lot of my trading. Why still work so hard outside of trading, making YouTube videos? Well, here's the thing. When you're a full-time trader, and I went full-time, and I was not on social media, you kind of lack a purpose. So if you ever have the chance to go full-time trading, unless you're like an extreme introvert, you kind of you kind of get tired of that lifestyle. Like it gets boring after a while. Like what are you really doing? And to be honest, it's a little bit depressing. So when you go full-time trading, you know, you're clicking buttons and making money, but you're not producing anything for society. You're basically leeching and you're making money, right? But you need to have something that you're passionate about. So I'm passionate about trading. So obviously I'm trying to share my experiences and my journey so that other traders can learn from it because that's how I add value and I feel fulfilled. If you lack any of that, yeah, it doesn't. I mean, think about what trading contributes to society. Does it add anything? Does it make any difference when you click a button to make money? So I was full-time trading. I was making great money, you know, sometimes 20 to 40, 50K a month, but I didn't have anything else to do. So I used to play paintball competitively. I stopped doing that. You know, I couldn't really golf. I mean, I could go golfing, but I would be golfing by myself because a lot of my friends were still working. Um, you need to find something that you're passionate about, and you need to have a hobbies outside of trading. Like the whole point of getting into trading, right, is so that you don't have to have a job anymore. But when you go full time trading, are you trying to sit in front of the desk for 8 hours? It doesn't make that doesn't make any sense. I'm not trying to sit in front of a desk for 8 hours because the whole point of me getting into trading was to get my time back. But once you have your time back, what do you do with it then? You could sit around, read books, or play video games, but that's not, you know, you can only do so much with that, especially when you're younger. Like maybe if I was 50 or 60 and didn't really want to do anything and just wanted to like go to the beach and drink margaritas all day, like that's great, but you got to find something else to do with your time. Now I'm getting more into real estate, so that's keeping me busy. Um, but yeah, you definitely need to find something else to do with your time rather than just trading and like I wouldn't say wasting your life away, but you know, at some point you're gonna get bored of it. Yeah, so again, you know, I took the trade short after we broke through the bullish fair value gap and was not expecting this large 4 hour candle. I kind of wanted to just see it roll over, but I'm sitting in drawdown right now and I just have to deal with it. Either it's gonna stop me out or it's gonna roll over. But yeah, at the moment, I'm okay with the risk. If it stops me out, it stops me out. It's not a big deal. And if it kind of just goes sideways, then I have to sit in this trade longer than I expected. Which, you know, on a bank holiday, it could definitely just go sideways. You know, we could print another inside candle today. So again, what I'm looking for on Nasdaq is continued strength. Now, if this market is going to turn around and push higher today, we have to kind of hunt for the low. Like, where's the daily low going to be? Right? We have this bullish fair value gap that we're trading into. So if we get above this bearish candle, then maybe we could start hunting long, position ourselves long for a run higher. Now, if you're trading a higher time frame, you could just go long right now and put your stop loss below maybe this candle, right? So this candle, you have the fair value gap, and then you have candle two's low, because I think candle one's low is way too far away, unless you're really, really going to swing this trade. But again, I have a strong feeling that it's going to go to 25,900. We have some news that the government shutdown's probably going to end soon. So that might give a lift to equity markets. So we have that hourly fair value gap. All right, let me just take this off of the 4 hour chart. And then we have this 4 hour inverted fair value gap. So as long as we hold this level, I think we're just going to turn around and trade higher. What do I think about the whole situation in New York City? I don't really have any comments on that. I'm not like a big politics guy. I used to live in New York. Um, I kind of got tired of so the funny thing about New York is everybody loves talking politics. And the funny thing about Florida is that people don't really talk about politics. Like people are just living their life in Florida. Maybe it's the weather. Maybe they have better things to do than just talk about politics all day long. Um, and the thing was like when you start earning a lot of money and you start paying a lot more in taxes, right? When you're self-employed, you're paying a ton in taxes. You kind of recognize like, okay, I'm paying a lot of money in taxes in New York, but where is it really going? Like the infrastructure is breaking down, the roads are terrible, the bridges are terrible. You know, New York City is kind of I don't know, I wouldn't say falling apart, but it's not being well maintained. Let's just put it that way. How's the G Wagon? I love it. I think everybody should buy one. SMT with ES. I don't really see any SMT right now. Oh, you're talking about the highs? Um, I mean, I'm still bullish on this market, so I'm not looking at bearish SMT when I look at this. Yeah, but I'm not gonna move to Dubai. Dubai is across the world. Like my family is in New York. My wife's family's in New York. The solution to that, right, is just make more money. I'm trying to live in the States, just make more money. I don't follow those markets. I don't follow gold. I don't follow pound, Aussie dollar. So yes, it's good to follow more markets, but you have to like cap it at some point. You're not trying to follow every single asset in the market that's available to you. It just becomes too much. But yeah, I don't know. So the 12-hour printed a bearish engulfing candle. So this one, honestly, I might just cut it. I don't know. It doesn't really feel great. So we had this daily fair value gap that we rejected, and that's what I was anticipating for the market to turn around, right? The small one in here, uh, with yesterday's inside candle, right? That's why I went short. But right now we're kind of pushing towards the highs. I mean, maybe I'll just leave it alone because my stop is above yesterday's high. But how do I go from a break-even trader? I have a profitable model, but whenever I get out of drawdown, I take silly trades. That doesn't really have anything to do with your trading strategy or model. It has more to do with your mental composure and your psychology and how you're going to manage how you're trading. A lot of it is not looking at the P&L. Like when you're getting close to getting out of drawdown, stop looking at the P&L. Who cares? Keep trading properly. That's all you have to do is just keep trading properly. If you're not trading properly, of course, when you get close to being out of drawdown, you're going to make stupid mistakes because you're looking at the P&L. So a lot of you guys would be better off just removing the P&L from your screens. All right. Stop worrying so much about P&L. If you're risking what you should be risking, 1R loss is just a 1R loss. All right. Now, I want to bring up like my personal data from when I was with Apex. just so you guys can see it. Let's see. So just take a look at this, guys. 36% win rate. All right, I did lose $157,000, but I made $244,000. Now, this is across one account. Just times this by 20 accounts. Right? Look at the amount of losing trades I had. 159 losing trades. 93 winning trades. But look at my largest winning trade versus my largest losing trade. I lost 12K. Largest loser. But my largest winner was 34,000. Right? It's a big, big difference. So I'm essentially making 3 times on my winners compared to my losers. And that's because what? I'm aiming for a 3R and I'm scaling into trades when it's moving in my favor. Like right now, because it's moving against me, I'm not going to scale into this. I'm just going to leave it alone. And if I take a 1R loss, it just ends up being like one of these losers. A small loss, big wins. That's what you're looking for. You're looking for big wins. You're not looking for a high win rate unless you're like scalping and aiming for a 1-to-1 or less than 1-to-1. All right, because from a probability standpoint and a risk management standpoint, you have to have a certain win rate and a certain risk reward to be profitable. With me, a 1-to-3, I can have a 35% win rate and be profitable. Yeah, so I mean, when I was on that Apex run, right, each account was up like 150,000 times 20 accounts, right? Roughly $3 million in profits. But I'm not focused. I'm not focused on the P&L aspect of it. I'm focused on taking good trades. Because if I allow the losers to just throw me off of my strategy, my edge, and my discipline and my risk management kind of falls off the wagon, that's when you get into trouble. Right? You have to obey your risk management and you have to let your winners run long enough for them to actually pay you. After I found ICT, so I started trading ICT in 2017, and it took me probably 4 years before I actually started becoming profitable with it. Because there's no shortcut to experience, right? If you're going to test a strategy, and this doesn't even relate to ICT, you have to trade it long enough to figure out the edge, right? Whether that's backtesting years worth of data, trading all the different setups. So I've traded liquidity raids, I've traded fair value gaps, I've traded the power of 3, all those different concepts for years, right? Before I even understood what I was doing. And it's the same with any strategy. With any strategy, you should be back testing and forward testing. The thing with forward testing, though, is it adds emotions. Like when you're trading the live markets, you can't just click fast forward. Okay, there's no fast forward button to make price action move faster. So you have to sit in those trades. What advice would I give to a third world country in his trading journey? Lacks capital and to start, and the account he could try and acquire is 5K. It's hard for me to provide advice for somebody living in the third world because I've never been in the third world, right? Trading is a game about scalability, though. So when you're trading 5K accounts and you only have X amount of drawdown, you have to trade small enough where it makes sense. And oftentimes, you're not going to be able to trade the higher time frames with a small account like that. So yeah, this trade is not really going how I wanted to, but it's okay. If I take a loss, I take a loss. Gave it a good attempt. How many hours do I usually hold a 4-hour setup? Sometimes, honestly, sometimes weeks. Because if you take a trade on the 4-hour, you have to anticipate each one of those candles is going to be 4 hours, right? So let's say if you did go short, or even let's say if you went long right now, back here, after trading into this fair value gap, right? And maybe your stop was down here. You have to sit through all of this, right? There's no like cookie cutter answer to how long you're going to be in the trade for because you can't control what's going on. Yeah, this looks like it's going to stop me out unless we take out this intraday high and then turn around. But right now it's not looking good. Closing trades before it hits your TP, I would say you should at least aim for a 1 to 2. Like if you're not aiming for a 1 to 2, it makes it difficult when you go through losing streaks. Just got stopped out there. Not the best trade to be honest, guys. I really wasn't anticipating a bullish day. Yeah. When you're trading with a 5K account, you basically, I would say you're kind of limited to like scalping the low time frames because even if you use a micro on NQ or ES, it's just a lot of risk. You have to take more risk than you're anticipating because their stop losses have to be tighter. Ninja Trader Cup is not paying some international countries. Um, it's probably a regulation thing, right? The Ninja Trader Cup is a futures. It's a futures competition. So I don't know. I mean, we took out this buy side liquidity up here, and dollar is just it really is just in this really big consolidation, which is very frustrating for me. Because it's hard for me to get a read on where dollar wants to do. Yeah, I would have been better off just not trading today because of the bank holiday. No, there was a clear close. If I go back to the 4-hour, there was a clear close through the fair value gap. So this fair value gap, right? This 4-hour candle closed below it. And that's when I went short. Right? Just I wasn't anticipating this huge god candle on the next 4 hours, but I'm asleep. Like I'm not watching the chart. So even if I was, I probably wouldn't have done anything. What do I still battle with as a trader that I try to perfect? Honestly, the trade management. I can't perfect my entries anymore. And even with the best entries, you still have to have really great trade management. Even with the best entries, a lot of times those trades can go against you. So trade entries to me are not like the holy grail of trading. Because once you enter the trade, you still don't know where the market's going to go after you enter. Is there CPI tomorrow? No. I don't believe so. And look at the calendar. I'm not sure why you would think CPI is tomorrow. I've done decently well in the last couple weeks, but I would say price action, even over the last couple weeks, has been pretty frustrating. And it's probably one of the big reasons why I honestly slowed down going into the end of the year. I've never really had a great November, December, just historically. Yeah, the government's reopening, but that doesn't mean they have to like announce when they're gonna release CPI. Right now it's tentative for Thursday, but the government is still shut down, really. And maybe you're in a different time zone, maybe you're ahead, but it's not tomorrow. Tomorrow is the 12th. You guys can see here we have just Aussie news. And then Thursday, it's tentative, but this might get canceled. How do you overcome being overwhelmed with going back to your old ways, like having a process, but then once you get a loss, that is a psychological problem. And the way you overcome it is by learning what your triggers are. Like what is causing you to go on tilt? The thing about trading is it is a mirror into like your behavioral habits. If you get angry and you revenge trade or you overtrade, that has nothing to do with your system, right? It has to do with the mistakes that you're making because you're feeling emotional. Yeah, I think my first six-figure trade was actually last December. Oh no, two Decembers ago. So 2 years ago, I had $100,000 trade overnight on the last trading day of the year. Actually, it wasn't. I don't think it was. I don't believe it was. It was the 29th. What's the most important thing in my trading? Honestly, my emotional control. Like if I took a loss on this trade and then all of a sudden I just start making mistakes, that isn't a problem that I had to fix. Like instead of just taking the loss and just saying I'm wrong on this market, and usually when I'm wrong, I give myself time to actually analyze what's going on. So just because I took a loss also doesn't mean that I'm gonna just completely abandon the short idea. Because what happens if you chase a long now and then it turns around on you? If I miss the daily expansion, usually that's it. 100K is peanuts to me. I mean, it's all relative. 100K is still a lot of money. Like, don't get me wrong. It's still a lot of money. I use kill zones for my entry sometimes. But sometimes when I am trading the daily charts, I'm not looking at kill zones. Because I have daily stop losses and daily targets. So usually if I'm in a daily setup, let's say if I went short after this daily bearish candle, and let's say I went short here around the open and put my stop like at 50%, and maybe my target's all the way down here at these lows down here. Do I really care what session I get in on this next daily candle? No, I don't really care. Like whether you enter during New York or during Asia, it's not changing the risk reward that much. $2.5 million is good. Yeah, I think so. But my thing this year is like I've already outperformed anything that I would have thought this year. So like I haven't been trading big at all since April. If anything, I'll probably just stop trading for the rest of the year. I could have stopped trading in April, guys, and just been totally fine. You know, because I'm looking for market conditions that are like, they really jump out to me. And lately, I haven't really seen anything, even since April, that really stood out to me. There have been some days where I'm like, yeah, this looks pretty good for a run higher the next couple days. But outside of that, my expectations have been really low. You want to introduce trading to your friends? Where do you start? To be honest, I wouldn't even waste your time. If people are serious, they're gonna ask you. Like you shouldn't tell them to trade, because what happened with me was I would tell all my friends about trading. None of them followed through. And then every time I see them, they're like, "Yeah, I'm gonna start trading." Nobody really takes it seriously. You will know who's gonna take it seriously when they're actually asking you questions. Like you should not be going out of your way to try and get your friends to trade. No, I trade Euro futures the same as I do CFDs. But I'm mainly trading futures because of the tax advantages. Market conditions that I really look for, honestly, it's a lot, right? The macro perspective has to make sense. So like when the Fed is either hiking or cutting rates, which they're probably done cutting rates for the rest of the year. And you kind of need a bit of chaos going on. So like during COVID or during Trump's inauguration, right? So like when Trump took office, right? All of a sudden now tariffs are a major headline. Right now we don't really have like a major headline that's causing these markets to get shaken up. Well, yes, we have a fair bit of volatility. It's not something that I feel very confident about one specific direction. Can you trade on bonds? I mean, you can, but bonds require a lot of margin. Yeah, somebody said you don't find trading, trading finds you. Yeah, exactly. I mean, I've definitely spent way too much time trying to convince my friends to trade. And this was years ago before I even found success. Now I have the success and none of those guys followed through. Like if they had just started trading, they would probably be, they would probably be pretty efficient at it. Thing is you just have to start doing it. But a lot of the people that I've told about trading, they just haven't done anything to actually start, right? Because trading isn't for everybody. I don't work with a nationwide tax advisor. I work with somebody that is local to me. But a lot of it I had to learn on my own also. You know, if you just go into ChatGPT and say, this is my income, what are the best tax strategies that I can use to reduce my taxable income? Because when you live in the States, that's what you're trying to do. You're trying to reduce your taxable income. But you're not just trying to blow it on stupid things. Like you're trying to, the biggest thing right now is investing in real estate. So if you invest in real estate, like short-term rentals, you do a cost segregation study. And what it does, so typically with real estate, you can depreciate a building over the course of like 30 years. But with, you know, some of the new bills coming out and everything, they have a cost segregation study where it pushes a lot of those 30-year depreciating assets into year one. So instead of you writing off, just say you spent $30,000 on a roof. Typically what they do is they take the $30,000 roof and they let you depreciate that over 30 years. So that, what does that end up look like? What does it end up looking like? That means you can reduce your tax bill. Reduced income through depreciation. And they let you do this over the course of 30 years. So each year you're able to reduce your income by $1,000. But instead of that, if you do a cost seg, it's called cost seg, they let you push this all into year one. So you can reduce your taxable income by $30,000 in year one. Right? So you're buying real estate and you're able to reduce your income by this amount. Right? So like, let's say if you have a purchase price on your house of, you know, on your rental house of $250,000, well, you can't write off 100% of the $250,000. They have to take all the different aspects of the building and put it into different life cycles, and then you're able to depreciate that in year one. Does that make sense? If daily and weekly are bullish and 4 hours resting in a bearish fair value gap, well, I always defer to the higher time frame. So if the higher time frame looks bullish, I'm usually never going against that idea. But I think after last week, we might just get an inside week on NASDAQ. Yeah, exactly. And you buy another property in year two. You just keep doing that. This only really makes sense if you're a profitable trader, though, or if you have a large income. Like if you're making 300K a year, then it makes sense to try and reduce that. Otherwise, a lot of it's going to taxes. So for me, because my income was like $3 million this year, I'm trying to get that down to like $1 million. So how do I do that? I buy a commercial property or multiple short-term properties. Buy a G-Wagon. The G-Wagon's like 250K. Right? Buying the G-Wagon, let's say I put 50 grand down, is actually going to save me like 75,000 in taxes. So instead of that 75,000 going to the IRS, right? It goes into an asset that I get to keep. Yes, you still have to pay for it, but you're reducing your taxable income. And the thing is, you're trying to turn that into a cash flowing asset. So like, let's say if you don't want to pay for the G-Wagon, now you just start renting it out and cover the car note. With a short-term rental, you're trying to cash flow positive with it. What do I have on gold? Nothing. I don't trade gold, man. You guys are on your own. You don't want You don't want an opinion of somebody that is not a gold trader. I don't trade gold, so my opinion to you should be worthless. A G-Wagon, to me, is an asset. If you look at G-Wagon's sticker price, a 2023 G-Wagon is actually going over sticker. It's still $20,000 to $30,000 over sticker. Yeah, crazy to think about that. If you buy the right cars, they do appreciate. Just because the G-Wagons are very limited. Like, the dealers only get a certain allocation every year. But yeah, 2023 is going for more than what people bought it for. So even if they don't appreciate, at least they hold their value. How do I incorporate seasonal trading? Not sure what you mean. When it comes to seasons, I typically have seasons where I'm pretty active and seasons where I'm not. I don't really follow seasonality like that. But usually going into the end of the year, like now, the next couple of weeks, I'm probably going to slow down going into Thanksgiving. And then in December, I'm trading very lightly ahead of Christmas. If Euro looks very bullish, but GU looks bearish. I mean, right now, GU doesn't really look bearish. I did want to see it roll over, but it's not getting it, so. But yeah, to me, a lot of this price action is hard to trade because overall, dollar is just in its consolidation. Like, if we just check the price of dollar from now all the way back to April or May, it's the same price. Yes, it's gone down a little bit. Yes, it's gone up a little bit. But overall, it's just in a range. Like, compare this range that we've been in with, like, these periods, right? These are the periods that I'm looking for. I'm looking for this, and I'm looking for this. So I was able to take advantage of both these moves. But now, I've been taking a fair amount of losses in Euro because the dollar is just chopping around. So the majority of my profits this year have come from trading NASDAQ and not currencies. Yeah, I understand seasonal tendency. I don't look at seasonal tendency. Here's the thing, is that most traders think that they need to add all this complexity to their trading. You don't. You don't need to add any of that. Because at the end of the day, you knowing about a specific concept doesn't change the probability of the next trade that you take. Yeah, maybe it adds a layer of confidence, but I've seen seasonal tendencies that don't work, right? I've seen news events that don't work, where you have good news and then the market is going lower, and you're like, why is this doing this? Well, that's why I'm mainly just a technical trader now. If you listen to Linda Rash, she doesn't follow fundamentals really. She's just a technical trader because the market is never wrong. Isn't it a good idea to drop to low time frame on high time frames and consolidation? That's not what I do though. You can do it, yes, but here's the problem though, is that a lot of times that changes your approach to the markets. Because let's say if you just drop down to the low time frame and then all of a sudden the high time frame just starts trending, you're going to miss a lot of moves because now you've changed your strategy and then the market condition changes with it. So what I try and do is I just wait. Like, when I don't have the high time frame set up, I just wait. Which, a lot of you guys can't do that. I would like to see NASDAQ trade higher today. Right now, we're in a bit of a discount from this low to this high. Right? Yeah, so NQ, we took out this swing low. Let me just remove this stuff here. Took out this swing low. And we got a really strong wick here. And then yesterday was very bullish. So I'm trying to get long, but I have to get long at the right time. Maybe today is not going to be the day to get long. Maybe tomorrow will be better. Maybe today it's going to print a bearish candle, and then maybe I can hunt a bullish fair value gap that's down here. What I would look for, though, is if it rejects from this bullish fair value gap from yesterday. If it does that and we get above this bearish candle, right, we get a nice hourly candle, then maybe you want to attempt a long. The thing is, yesterday was so bullish that I don't trade. Usually when we have a very bullish day, I try not to trade against that idea. But as I just showed you guys, I get a lot of trades wrong. So you guys have to get comfortable with me showing you that I get a ton of trades wrong. Like, this is normal for me. Well, I wouldn't say it's normal. Most of the months, I'm hovering at like 50 to 60% win rate. But I'm just showing you that I can get a lot of trades wrong, right? Almost 65% of my trades wrong, but still come out ahead. All right, just based off of this, average losing trade versus average winning trade. Well, first of all, so you're asking, what do I base my ideas on? First of all, I have to understand where the high time frame is going to go. So here yesterday, I took a short because we rejected from this small daily fair value gap. Or sorry, that's not on. It's not showing on the actual currency chart. It's showing on the futures chart. We have this daily small fair value gap. This I was assuming was going to be a swing high. Yesterday it closed bearish, even though it closes an inside day. I was anticipating it going lower. Now, when I trade these inside candles, there is a failure rate with them. Right? Every setup that you take is going to have some type of failure rate. Richard Dennis, probably one of the best traders in the world, only won on like 15 to 20% of his trades. But on his winners, he scaled into his winners. And you have to be comfortable with that. Like, for me, I probably can't mentally handle losing on 80% of my trades. That's a lot. But me showing you guys this is that you don't need to have a high win rate to be very, very profitable. Okay, I had a 30 to 35 to 40% win rate and made $3 million. All right, because I'm able to take advantage of the winners when it's moving my favor. So like here, let's say I went short on this day because it's trading into this gap here. And then the next day just completely dies. Well, instead of me just closing the trade out, I'm going to look to add on the trade when it retraces. So if it comes back up here, I'll add, put my stop loss above this daily high, right? And then the next day it trades lower. Where do I move my stop loss? Maybe 50% of the wick, or maybe the high of the wick. Now all of a sudden, my first entry, maybe my second entry is closer to break even, and then I can add another entry, and then it just keeps going in my favor, right? So instead of you making, 4 or 5R on this trade, now you're making like 10, 12, maybe even more on this one trade idea, right? This one trade idea came off of a daily time frame. But when you scale into that trade, you take advantage of this move lower. And then when you take a 1R loss like this, you don't really care about it. Right? I'll lose a lot. But as long as I manage my risk appropriately and I'm not over leveraging and over trading, I know in the long run, I will come out profitable. So at the end of the month, let's say I take 100 trades in a month, which is a lot. If I lose on 65 of those trades, that's totally fine with me, as long as those 35 trades pay for the winners or pay for the losers. No, my trading style wouldn't change with a smaller account size. And that's what you guys are messing up with. Your trading style should not change whether you're trading $1,000 account or a $100,000 account. 1R is 1R is 1R. Figure out what that R value is going to be for you. Maybe that's $50. Maybe it's $5,000. Should the dollar amount change what you're doing in the market? No. And that's why it's too many people are too focused on the P&L and the size of trade that they're managing. So let's say we went long right now. And you risked $50, but I'm risking $5,000. And it goes to the target. It's the same trade, isn't it? The only difference is the way that you manage it. Maybe you can't handle managing a $5,000 stop loss and you're not comfortable with it. So like when it gets close to your stop loss, you cut it. But the guy that has a $50 trade on, he just holds it. That is a mental problem, right? That has to do with your mental edge. That doesn't have to do with the trading strategy. We're taking the same trade, right? We're both going to go long inside of the fair value gap. What's the best way to master fair value gaps? Trade them. Just trade them. There's no shortcut to this. I've traded hundreds, if not thousands, of fair value gaps. And you learn over time that not every single fair value gap is going to work. You just trade it. So when my edge appears, when I have an edge, right, where I have a good feeling of where the market's going to go, I just place a position without overthinking it. So stop overcomplicating it. Just place the trade. If you lose on it, you lose on it, right? Again, I'm showing you I've lost on 159 trades because I take every single fair value gap that aligns with my system. So if I have a high time frame bias, I'm still taking that fair value gap. 159 of those trades could have been losers, but I'm not going to hesitate when it appears, right? I'm just going to assume, okay, that fair value gap didn't work. I'm just going to wait for the next one. It's simple as that. When that next fair value gap appears, though, what do? That's the problem. Do you not take the trade? Do you size down? Do you size up? Those are the mistakes that traders make. Instead of just having one consistent process throughout the whole period. Whether you're winning, whether you're losing, you show up and do the same thing every single day. Regardless of the account size, right? Regardless of what your last trade was, because your last trade does not dictate what's going to happen on the next trade. So stop focusing if you're on in a losing streak, right? I took a loss just now. I'm just going to wait for another opportunity. And when that opportunity appears, I'm just going to take another 1R risk without worrying about taking another loss. Because if I take another loss, it's not the end of the world. The biggest thing is that I show up and follow my system and my processes every single day, regardless if I'm on a losing streak, regardless if I'm on a winning streak, regardless if I risk $1,000, regardless if I risk $5,000. I'm following the same process. Because for me, the trade size does not change the trade. Yeah, I think so. I think the mental edge is much more important than the technical edge. Because think about this. If I gave everybody in this chat a strategy, a very simple strategy, and we all took the same trade, how many of those people, let's say there's 100 people that take the same trade, how many of those people are going to, if it goes to take profit, how many of those people do you think are going to profit from that trade? Do you think all 100 people are going to profit from that trade? You know, this is just an assumption. I want you guys to answer. If there's 100 people that take the same exact trade, do you think all 100 of those people are going to profit if it goes to take profit? No. What's going to happen is some people are going to size in too heavily when it's going in their favor. Some people are going to adjust their stop losses. Some people are going to exit because they're afraid of losing profits. Right? If you're a discretionary trader, you know, well, I wouldn't say 95% is going to lose, but definitely not 100. Definitely not 100. You know, 100 of the traders that take the same exact trade are not all going to have the same result. Some are going to have losers. Some are going to have break even. Some are going to have winners. But the trade was the same for everybody. Right? The price that we all see is the same price. And that's why, my opinion, the mental edge is much more important than the technical edge. It's how you operate when the markets are moving around. Yeah, it could be as simple as that. Finding your model, you should keep it very simple. And the point of having a simple model is that you can repeat it every day. But the hard part, again, is dealing with the emotions that come with winning and losing streaks. That is the hard part. And following your plan. Because a lot of people, after a winning or losing streak, they change what they're doing. Maybe they size up on the next trade. Maybe they're impatient. A mechanical system is key. I would say at least partly mechanical. It doesn't need to be 100% mechanical. Because I've had a lot of trades where I discretionarily exit based on where the market is. And it saved me a lot because, if let's say if we're trading time, all right, if I enter a long position with the expectation that at some point we're going to print the weekly high and it doesn't yet get to my target. So let's say my target is all the way up here, right? And let's say I went long, and this is just, again, theoretically. If I went long, put my stop loss here, my target is all the way up here. What do I do when it's trading up here on Thursday ahead of CPI, but it's not at the target yet? Do I mechanically wait for the TP to get hit, or do I exit? And what has happened to me is discretionarily, I've exited because we have that high impact news event coming out. And what happens is this thing dumps, right? So if you just have a 100% mechanical strategy, you end up giving back a lot, or at least what I've noticed. So again, that comes down to just experience in the market. And it's more of an experience thing and a gut feel. You've been trading for 5 years and have blown 50 prop firm accounts. You have to figure out what you're doing wrong. There's two different things that you could be doing wrong. Is it the strategy, or is it your mental edge? They're two different things, right? And I find that it's mostly people that don't have a mental edge. And what I mean by mental edge is that they can't follow the same system consistently for long periods of time. Why am I trading NAS on a bank holiday? I'm not trading NAS on a bank holiday. I'm just showing you what I'm talking about. I took a loss on Euro and that was it. Yeah, the A+ setup, it just comes down to experience. It comes down to experience, and it comes down to like your conviction level. But I usually tend not to get too overboard as far as my confidence level. Like some of my best trades, I would say I'm 60 to 70% confident in, because when you get 100% confident, that's usually when you get steamrolled. Because I've seen A+ trades, in my eyes, A+ trade, I sized up on. So instead of me risking 1 or 2%, I risk way more than that. Guess what happened when I entered that trade? For some reason, I just enter the trade and go straight to my stop loss. Even though at the time it looked like an A+ setup. And that's why I never put too much emphasis on extreme confidence. That's usually when people mess up. And that's why when you're following your plan and your approach, it should never get too far away from this. Right? When you see an A+ strategy, you should not be up here, right? Where you get overly excited, and then all of a sudden, what does that lead to? Over trading and over leveraging. Because you're so confident that the market's going to go that direction. Right? Or if you're not confident at all, maybe you just don't even take the trade. The biggest thing is that you just show up, and if you see a trade, you take it. But the context definitely has to make sense. You can't just go in there and just trade every single day when it doesn't make any sense. So again, for me, I have definitely slowed down after April as far as the amount and frequency that I'm trading. Just because I'm not seeing the market as well as I was earlier this year. And for me, since April, it's been more of a game of survival and not trying to do too many stupid things in between. When I see my trade set up, for example, fair value gap with bias, what confluences do I add? Well, does the daily make sense? Is the market structure in line with that? And am I trading around the calendar where it makes sense? Yeah, exactly. You're paid to manage uncertainty. You're not here to predict. We are making educated guesses on the market. But if you get invalidated through a stop loss, you just reassess it and not try and just jump right back into the market. Right? How much capital would you save if after every stop loss you just went on a 15 to 20-minute walk? Just get off the desk and go walk around for 15 to 20 minutes. When you come back, you might not even want to take the trade, but in the heat of the moment, your brain goes on autopilot and it's like, all right, my trade was just invalidated. Let's go long now. And then you get stopped out again. So I'm usually not changing my bias. I'll give it like one trade a day. For me, one trade a day is probably more than what I'm doing on my biggest weeks. Some of my biggest weeks, I'm only taking 2 to 3 trades. Not 2 to 3 trades as far as 2 to 3 executions, but 2 to 3 ideas. And sometimes just one idea. I might just have one idea for the week, but I'm taking multiple executions. So if I have a strong idea on where the weekly is going to go, I'll go like, let's say if I'm bullish on the week, I'll go long on multiple days and manage that position intraday. But it's the same trade idea for me. I'm still bullish for the whole week. All right, and I'm just trying to take advantage of those intraday pullbacks. How to overcome hesitation while taking a trade? Experience. I think it's just experience. You know, like compare trading with sports, and I always use sports as an analogy because it's just like it. Let's say that you're a basketball player and you are not really you've taken some free throws, but you're not really comfortable shooting them. It's more of like a muscle memory thing. You have to take hundreds, if not thousands, of free throws to be doing it unconsciously, right? You're not even thinking about it. You think Kobe Bryant was really thinking about his free throw shot? No, he's just going through the motion because it's all muscle memory. But that's from experience. That's from him taking thousands of free throws. The only way to overcome the hesitation is to put in the work. You know, there's no substitute in the markets for hard work. You have to go through those periods where you're on a losing streak and crawling out of those losing streaks to understand what you should be doing. But a lot of people, they don't know how to navigate around losing streaks, and they don't know how to navigate around winning streaks. They just go into a losing streak and then they have all these bad habits, right? And what happens is they gamble their way out of a losing streak. But that's not the proper way to get out of a losing streak. So the next time they go into a losing streak, because it worked last time, they start gambling again. You're like, I got out of the losing streak last time because I gambled. But now you're building bad habits, right? The habits that you should be building are the good ones. Is to slow down, to size down, to not take too much risk, and slowly crawl out of drawdown. But a lot of you guys are in a race, right? You're in a race to find profitability, and you're in a race to make money. But usually the people that get paid in the markets are the people that don't need money. Or the people that are profitable in the markets are the people that don't need money. Because they can sit and wait patiently not taking trades. They can follow their plan because they're not worried about the last couple losers that they had. They can afford to pay for more platform challenges. Right? A lot of it comes down to like your financial aptitude as well. Like if you were never good managing the $1,000 in your bank account, what makes you think you're going to be able to manage $10,000? I'm gonna hop off here though, guys. It's probably gonna be, I don't know, in my opinion, maybe a slow day. Probably a day where you don't really want to be trading a whole lot, or if at all. Maybe you don't want to take any trades. I probably should have sat out of Euro and waited for a break of either side of the inside candle. Like if I waited for the break of this inside candle, I probably would have had a much better idea. So like if this daily closes here, I'll probably lean long, to be honest. But it's tough because this market is just kind of trending downwards in this channel, right? So maybe at some point it will put in that lower high. But I guess until then, you know, I just have to come back to the drawing board and reassess my position in the market. Maybe I just don't even want to trade the dollar right now until we actually get a movement outside of this consolidation. Because right now it's just up and down, up and down, up and down. Right? It's not really going anywhere. What's going to change my bias is if we get really strong displacement where the price action is clean. Right now, I have a really hard time reading this. But I hope you guys have a great week. You know, trade safe. Don't do anything stupid. That's usually like my tagline is don't do anything stupid. And that honestly, just thinking about that is going to make you a better trader. Follow your plan and your process. Understand that you can lose on a lot of your trades, like I'm showing here. You can lose on a ton of trades and still make money. So you should not be afraid of taking losses. You just have to take losses in the right way. Don't move your stop losses higher or lower. Like let's say if I was short, I'm not going to just move my stop loss higher. That is a dumb mistake. I'm not going to just jump back into the markets. That is a dumb mistake. I'm not going to oversize on my next trade. That is a dumb mistake, right? That's just me avoiding doing anything stupid. Yeah, it's hard, especially when you know that you did something stupid afterwards. And it's always after the fact because you know better. In that moment, you know better, but your monkey brain just goes on autopilot and you just start doing things that you know you shouldn't be doing. But you have to be able to catch yourself before you do it. That's the biggest thing. All right, guys. Have a good one, and I'll see you guys next week. Later.